Hi everyone, it's Adam Coburn here at Low & Co Realty. Thanks for checking in. I didn't do a monthly update last month, so we'll try and cover December and January for the Wellington real estate data, of course, compared to 12 months ago and 24 months ago. And interesting times, folks, because in the last couple of months, the Wellington market has softened again. We were sort of returning back to stable market, but in the last couple of months, we have seen a continued softening once again. So how long can this continue for? My message to buyers continues to be, get amongst it, don't wait for things to get better. So let's get into the detail. Median sale price, $765,000 in January 2023 versus $915 in January 2022. It's a drop of 16%. That differs somewhat to the over 20% drops we've seen, and that is because in January 2022 we saw an unusually low median sale price compared to the months either side of it. So we're kind of comparing the most recent month's data with an unusually low baseline to start with. So I suspect we'll see that number increase again next month. But as you will know if you follow these videos, I don't pay too much attention to the median sale price because it reflects not only underlying values but also the mix of properties that are sold during that month. The far better gauge of underlying values is the Real Estate Institute House Price Index. So let's look at that. So you see there in Wellington there a drop of over 2% in January and nearly 6% for the 3 months to January. So that's quite an uptick again, quite an aggressive fall. And look at the table where Wellington fares against other parts of the country, and you'll see there over the last, from the peak of the market, which was kind of October, November 2021, Wellington market fallen in value by over 24%. That's significantly more than everywhere else in the country except for Auckland, which is a little over 21%. So Wellington and Auckland certainly are the outliers there. Wellington and Auckland have fallen in value significantly more than the rest of the country. So an interesting trend there. And look at the graphs here, you'll see for Wellington, the blue line is the 1 month HPI change, and the yellow one, the orange one, is the 3 month result. So you can see there, up to a couple of months ago or 3 months ago or so, we were returning back to a stable market meaning zero change in the house price index. But in the last couple of months, those lines have fallen away again. So as sort of earlier indicated, we were heading towards a stabilising market. The market was stabilising, but in the last couple of months, values have fallen away again. How long can that continue for? So I've got a couple of extracts here from Tony Alexander's premium weekly newsletter. So big thanks to Tony for this data. These analyses are amazing. First one there, looking at the traffic at open homes. How much activity are agents reporting that they're seeing at open homes? And this is according to Tony's survey, which gets done once a month. And you can see there that in Wellington, 60% or roughly 60% of agents are reporting more activity at open homes, and that's certainly consistent with what we've seen here at Low & Co. In January, we've seen a significant uptick in the amount of traffic at open homes. So typically, of course, more activity from buyers, more traffic at open homes, that tends to translate into more offers and will provide support to the market, which would suggest that arresting the price falls. And then the second graph there, this is also a very interesting one. This is showing the ratio of Wellington City House Price Index to the New Zealand average. Now note, folks, this is Wellington City, not Wellington Region. So this is not reporting on Lower Hutt, Upper Hutt or Porirua, and the graphs for those territorial authorities look slightly different. But what this shows us is where is the house price index for Wellington City in relation to where it normally sits as a function of the overall New Zealand house price index. So the black line there shows the trend, and the orange line shows where it is today. So you can see there that the values in Wellington City are definitely below where they are in a long-term trend compared to the New Zealand average. Now, that doesn't mean that the orange line won't go further below, but it certainly means there's less froth in the Wellington city market than there normally is. It's below average in terms of value compared to the rest of the country. So to me, that means that the Wellington city market is more defensive than the country overall. And that's consistent with having seen larger price falls or larger value falls in Wellington city and Wellington region indeed than the rest of the country. Moving on now to number of new listings, 527 in January 2023 versus 717 a year ago and 601 2 years ago, so a drop of 26% compared to a year ago and 12% down compared to 2 years ago. So look, overall folks, new listings have been consistently down. You can see there that the red line shows the overall pattern there for the 6-month moving average. It has been falling for about the last year or so and falling significantly. So if we look here, the next graph shows us what have been the number of new listings compared to 12 months ago, and the blue graph clearly shows there over the past 5 months we have seen significantly lower new listing volumes than we saw 12 months ago. So what does this mean? It means that the amount of supply coming to the market is considerably tighter than it was a year ago. This of course also supports provides a floor for the market, so would discourage prices from falling further. Why is this happening? Who knows at the end, but what I'm suggesting is that there's no financial pressure on vendors to sell. People have still got their jobs, wages are rising, and so we're seeing a reduced number of vendors willing to put their property on the market given values have fallen significantly. So only those who are really, really serious about selling will be putting their properties on the market. So a reduced number of new listings, especially over the last 5 months or so. In terms of number of sales, and this is also very interesting, 257 in January versus 329 a year ago and 290 2 years ago. So again, in the last month, significantly down on 12 months ago, and down not as significantly, but still down compared to 2 years ago. Again, you look at the shape of that graph, that red line is showing you quite clearly the number of sales have been dropping consistently for the last couple of years, and in the last sort of 6, 8, 9 months or so, we have seen very, very low sales volumes, all floating around on average 500 sales per month for the last 6 to 8 months or so, and that is the lowest that red line has gotten to since I started collecting data in March 2015. So we certainly are seeing a low number of sales, low sales volumes taking place. So on one hand, we got fewer new listings coming to the market. On the other hand, we've got a reduced number of sales. So it's almost like vendors are pulling back and buyers are pulling back also. A bit of a Mexican standoff. Again, you can see that in the next graph here, which clearly shows for the last pretty much 2 years, we've seen sales volumes dropping as compared to a year ago. So that's just a continuing of the same point. How long has it taken to sell property in Wellington? In January, just past here, we've seen 62 days versus 49 days a year ago and 37 2 years ago. Folks, 62 days is the longest median duration that we've seen in Wellington since February 2009. So the longest it's taken to sell property overall in Wellington for over 13 years or so now. So look, that is slow. Is that an outlier? January and December do tend to be slightly unusual months, so let's not assume that's an ongoing trend just yet. Let's see what February data produces. Inventory, how much supply have we got on the market as a function of the amount of demand? So this is how many weeks would it take to clear the entire inventory of stock. So in January, 18 weeks versus 14 a year ago and 7 2 years ago. Of course, 2 years ago we were in a very, very tight market indeed. So there's no question 18 weeks is a lot more than we saw a year ago and 2 years ago, but it's not a long time. It's not a lot of inventory compared to what we've seen over the last 12 months. In December, we saw a big increase up to sort of 22 weeks or so. So we're back down to 18 weeks. It's a bit of a drop since that time. Again, December and January do tend to be slightly unusual months. So let's see again what February produces. Number of listings on Trademe, so 2,715 as of a couple of days ago when we were recording this, versus 2,457 a year ago and 1,082 2 years ago. So compared to a year ago, it's only 11% more than what we saw a year ago. And again, you look at the shape of that graph, you can see we've seen a gradual increase in the amount of listings on the market in February compared to January. So this is a pretty gentle increase, which is typical for seasonally typical. As we come into February, we do typically see a significant increase. We haven't yet seen a significant increase, definitely an increase. So again, it'll be interesting to see if we are continuing to see large numbers of listings come to the market in March. And the next graph here shows how many more listings are we seeing compared to 12 months ago on Trademe. And as the data suggests, they're only 11% more than we saw a year ago. So compared to, in terms of the changes in listings that we're seeing in Trademe compared to a year ago or so, we are certainly entering into a much more stable period where we're not seeing significantly more listings than a year ago. Again, that suggests if we continue to see more stable listing volumes, that does not introduce or suggest further softening in the market. So folks, in summary, Wellington values definitely were down again in December and January. New listing volumes have been low for the last 5 months or so. Sales volumes have been down consistently for over a year now. The duration to sell in January was the longest we've seen since February 2009. Inventory is high-ish, but lower than December. Trademe listings are increasing slowly, as we would expect for this period of the year, that being summertime. And my message to buyers, get out there, continue to take advantage of these conditions while you can. Do not assume they're going to get better or indeed stay this good forever. Thanks for checking in. It's Adam at Low & Co. See you next time.